Okay, good morning, ladies and gentlemen. Welcome to IGE Forum this morning. Today, we are most fortunate, I should say, to have an outstanding guest speaker, Dr. Henny Sender, who is one of the most respected journalists in the world and true authority, an expert on the area of economy and finance. So we are so very thrilled to have her today. I'm confident that Henny's exceptional insight will help us better understand the trends and emerging issues related to global economy and finance, as well as other directly related challenges facing us today, with a special attention to the economic prospect like China and India. By the way, Henny is the leading authority on these issues, especially she worked extensively on these countries, China and India. If I remember correctly, Henny's doctoral thesis are very much focused on India. Am I right?
So I had studied Chinese. At that time, it was very difficult to go to China, but there was a lot of US government money to go to India in those days.
Okay, right. Briefly introducing our speaker. Henny's distinguished career includes her position as chief correspondent for international finance at the Financial Times, FT, for 13 years. Prior to joining FT in year 2007, she served as a senior special writer for the Wall Street Journal for 10 years, where she received the prestigious Loeb Award, LOEB, most prestigious award. Most recently, since year 2020, Dr. Sender has been with the BlackRock, the world's largest investor, with about $10 trillion of assets under management, an important shareholder of Korea's major enterprises. That's very important, ranging from Samsung to POSCO and most of the financial groups in Korea. BlackRock has been taking very important stake, for which I very much appreciate for BlackRock's continued interest in Korean economy and enterprise. Henny holds a graduate degree from Columbia. On a personal level, I'm very happy to say that Henny has been very special, a close friend of mine for years and decades. Decades. As well as a mutually trusted partner for our professional activities. I'm very grateful. I'm very proud of our very special relationship with years, decades. Today's format follows a fireside chat between Henny and myself, but I would encourage our audience to submit their question through our chatting room. Without further ado, let's welcome Dr. Henny Sender, who is joining us live from New York by skipping her otherwise very nice dinner. She's with us, and thank you very much. Welcome again to IGE's Distinguished Relations series. And today, broadly, I would like to talk about three areas of interest. First is global economic prospect, with some, as I mentioned earlier, special attention to the two important countries in Asia Pacific. By the way, you are as I said earlier, the authority in this part of the world, and especially in India. And also, I would like to explore financial market situation. And clearly, financial market has shown some positive response this year, especially having suffered seriously last year. And how do you see the market is shaping up in the coming days and months for the rest of the year and next? Following up on the likely action to be taken by the Fed, we released it tomorrow. You can talk about rate environment overall, how best we contain inflation and moving forward on a sustainable basis. And the third area is perhaps before we close, given the extreme weathers we witness around the world, perhaps we may talk just a little bit about rededicating ourselves to the important agenda of ESG for sustainable growth from longer term perspective as well. And of course, as usual, Henny, you could sort of jump in with whatever the important issues that you feel important and you would like to share your insight with our audience. You're welcome to do that. Okay, so let's start. Just overnight, IMF has just released the latest update of the global economic prospect, slightly upward revision to 3% growth compared to the earlier last April outlook figure. Now, I would like to hear how you see the global economy is shaping up. Whether we, as IMF, and perhaps for that matter, many other analysts have been indicating that we may be heading for sort of a soft landing scenario, especially for the U.S. economy, has shown quite a bit of resilience month. So let me start with the global picture, the big picture, how you see the economy progressing, and the kind of downside risk that you see down the road, especially in conjunction with second largest economy, China, for which many people fear that clearly the growth momentum is being lost. And we are very keen to have your sort of assessment. And then you could also talk about India, that has been emerging as a sort of a leading country in the post sort of China sort of environment. So we like to have your assessment of the countries India is. All yours, Henny.
Well, I thank you so much for your warm introduction. It has been actually, when we met the first time, I was coming to Korea from Japan, and it was the bubble years in Japan. And I hope that tonight I won't destroy your credibility with all the many people that tune in regularly to hear the panels that you sponsor. I'm going to start with the pre-COVID world and tell you how I was wrong just before COVID came along, and that I thought technology would be incredibly deflationary, that the sharing economy, for example, would mean that cars would go from being a thing to a service. And then we had COVID. And one of the interesting things to me is how hard it is to generalize about the global economy in a post-COVID world. So one of the many things that I've been wrong about is the strength of the US economy, and particularly consumption. And is it a legacy of the COVID world and all the transfers to households, which have supported consumption, and consumption has held up so well? And does that mean we're on a new trajectory in which people in the US have confidence, which becomes self-reinforcing? Or is the stimulus just longer lasting, but not taking us to a new trajectory? So, the housing market, which is where the real economy meets financial assets, housing has held up quite well, in contrast to commercial real estate. There are many puzzles in which you can argue the US is so resilient and strong, or is it that all the stimulus that has pumped in has just lasted longer than we expected? And this is one of the primary questions that I ask myself. One of the things that we're all concerned about is the difference between the recovery from the COVID shock to the recovery from the what people are kind enough to call the global financial crisis, even though it started in the US. And in retrospect, the Fed kept interest rates low for much longer than we all expected, and much longer than it should have done. And so we see asset prices being very, very high. And for years, my firm was one of the biggest beneficiaries, because equities are going to perform splendidly in a zero interest rate world. Since March last year, we've moved from 0 to 25 basis points to 5 and 5 1/4. And yet household consumption is incredibly resilient. And though we see the hangover in many cities, including mine in the States, where people haven't gone back to work, and many banks are being left with non-performing loans on commercial real estate in cities like New York, precisely because the US economy is a continental economy, we're seeing states and cities in other parts of the country doing really, really well. So it's very hard to make sense of all of it. But I will just end this first question and talk a bit about China for a minute. In 2009, China launched a very aggressive stimulus program. And so much of the world's growth came from China being the locomotive. I don't think we will see that kind of recovery in China. I don't see that China will be the locomotive for the world that it was after the global financial crisis. But I'll pause here.
All right. Okay. So On China, could you talk a little bit more about the challenges they face? Now, lately, it's been known for some time that, as you said, just after the global financial crisis, China's very aggressive economic recovery programs, including local governments, infrastructure investment, and large infra-related projects, was a big supporter for sort of China boom. Now lately, because of this accumulated debt by China's local governments, according to the recent statistics, it's amount to, in total, like $9 trillion equivalent. Huge debt to make the things structurally more difficult for China to overcome. Now, so it's from China boom to China doom. Maybe this incredible increase in the debt is one of the most challenging issues. So how do you see that? And also, I understand that the challenge China is facing is that in recent years, especially under Mr. Xi Jinping's third term, this increasing control and regulation on the private sector. So losing sort of private sector vitality is perhaps the most serious challenge for the future of China's economy. I would like to have your perspective on that.
Yes, the debt has been building up for a very long time. And after the global financial crisis, there were many articles saying, this is China's Lehman moment, referring to the day in September of 2008, when Lehman Brothers essentially imploded. And that hasn't happened. But the debt is a huge constraint today and limits China's ability to stimulate its economy using more aggressive stimulus programs. And, when I can certainly sympathize with a statement that says housing is for living, not for speculation. But construction and the real estate sector broadly were 25% of GDP. So when China announced its famous 3 red lines, which was Xi Jinping's way of saying, we think the housing market is too hot, it's too speculative, our property developers are too indebted, they represent systemic risk. I thought, well, if you're going to immobilize what was 25% of your economy, where will the growth come from? What is the catalyst? And at first I thought, and there was talk, especially among the policy banks, about more affordable housing and what they called at the China Development Bank, shantytown revival, raising the quality of housing for ordinary people. And we haven't seen those initiatives. And what's disappointing about China today is the monetary stimulus has been very incremental, but its effect is to work on the supply side of the economy, to encourage state-owned enterprises to invest more, which suggests that the imbalance between supply and demand will get worse. And every economist in China that I talk to is puzzled about why they haven't tried to work on the demand side of the equation more, to stimulate consumption and household demand. Because, you know, that's where the insufficiency is today. You mentioned regulatory risk, which is also a factor in China, and, you know, which has affected the private sector. And, you know, to see real innovation in a lot of areas, you need the private sector to innovate. And the private sector is fearful these days, for want of a better word, you know, and you do have also at the same time a disconnect between the macro and the micro. So, I mean, one of the areas that you have to give China huge credit for is, and where they do have a competitive advantage, is in electric vehicles and battery technology and the raw materials that go into that. But would I recommend that you invest in it? Maybe not, because it's so competitive in China. So, you know, when you see many Chinese companies going into, say, Southeast Asia, you know, it's to escape the cutthroat competition that they have at home. You know, so what you see on the macro doesn't necessarily give you enlightenment, you know, as an investor. And even now, I worry about a backlash because China does have such huge economies of scale. And I'll just make one more point before I pause, and that is China's competitive advantage, to me, has been always more about scale than cheap labor. And that's what makes China so incredibly competitive, I think. But, you know, will they face a backlash when they try to export, you know, some of these incredible EVs, especially in Europe?
Okay. All right. Wait, remembering what you said a long time ago, over the years, decades, you have been taking a rather optimistic view about China's future. But hearing from what you said just before, you may be becoming less optimistic about China, unless they make radical changes to sort of restart the innovative power of a private sector and so forth. Is that the right interpretation of what you said?
So I'm going to get back to innovation in a second, but first I want to make this point. China needs to learn from Korea. And when I say that, I mean, China needs to understand soft power. Look at the image of Korea in the rest of the world. Look at the lines in my hometown of Hong Kong every time a Korean movie opens. How many people love Korean culture all over the world? This is an incredible soft power. You know, and one of the reasons I'm much more optimistic today about Korea than I am about Japan is the flexibility of Korean people. And, you know, we've talked about this before, But after, the first TMT crash at the turn of the millennium, I was in Silicon Valley, and I met somebody whose name card was Samsung Venture Capital. And this must have been 2002, maybe. And I said, how long has Samsung had a venture capital arm in Silicon Valley? And he said, during the Asian financial crisis a few years earlier, we had to fight for our corporate life. And we laid off so many engineers. And you know what? These laid off engineers established brilliant startups. So the origins of Samsung Silicon Valley arm was not to invest in American startups. It was to invest in the startups of their laid off engineers. I don't see that kind of entrepreneurial spirit in Japan. So now I'll turn back to innovation. And, I want to tell the audience that yesterday when you and I were chatting, I was talking about the last SpaceX, which imploded, but no one said, oh, it's a failure. Instead, they said, we learned so much. The data that we could extract from that failure was immensely useful. That's the attitude that you need. But you can't worry about, will I be fired? Will I be thrown into jail? When something doesn't work as expected.
Okay. Well, Henny, you have been so nice to Korea for decades, which I very much appreciate. But frankly speaking, we also, in Korea, we also face our own challenges that we have to overcome. For example, like latest IMF outlook, again, Korea's growth prospect for the year has been lowered again. Unlike overall upgrade of economic prospect for the globe and for most of other countries, but so there is a message that we have to take seriously, and we have to work on it to improve our potential growth rates and set our sort of industrial structure in many ways in this changing economic, geo-economic paradigm. But always I appreciate your sort of positive view and kind sort of advice was for Korea. Now let's move on to India. Now, you mentioned briefly this investment divested from China to neighboring Southeast Asia. So-called Alt Asia, alternative Asia. Clearly, India has drawn quite a bit of attention given the size of the economy and most populous country in the world they have become, bypassing China, and huge potential. You did mention that before, but I'm wondering whether you are changing your sort of perspective on India's perspective. You did foresee great potential for a country like India, but you also have been recognizing important sort of structural, infrastructure related impediments for the country to face. But so broadly, how do you see that? International community and investors seem to be, more upbeat about the future of India compared to pandemic period. Your views for the future of India.
So, from an economic point of view, I have never been more optimistic about India. You know, for so many years, I thought India had an aspiration problem, both as a country and on an individual level. And part of it is, you know, the traditional social structure and the caste system. But, you know, while there's some elements of the Modi government that are deeply disturbing, from an economic point of view, he has gotten the country moving. You know, a lot of the barriers, you know, have gone down. A lot of the regulations that discourage foreign investment have been removed. You know, having one unified tax system makes things so much more simple. You know, India is a pioneer in digital things. And, you know, the former co-founder of Infosys, Nandan Nilekani, has used technology to empower ordinary Indians. And for the first time, I'm seeing so much aspiration on an individual and a country level. But when I'm in India, I always feel, you know, that this is a country that needs to learn how to walk before it flies. So you will have seen that Foxconn just pulled out of a semiconductor venture with its local partner. You know, when Elon Musk goes to India, every state is trying to get him to build, you know, cars in India. And yet, if you look at Tesla, what you see is workers from Tesla's factory in Shanghai going to California to try and raise productivity levels in the California factory, you know, and, you know, I can understand why Elon Musk says maybe India isn't ready for this. You know, they have moved away from heavily protectionist policies. So in 2014, shortly after Mr. Modi came in, one of the first things he did was slap a 70% tariff on solar panels from China and from Malaysia. And at that point, I thought, if China wants to subsidize solar panels, India should say thank you, because solar panels are very capital intensive and worker-like. They're the opposite of what India needs. Today, though, you know, production-linked incentives and encouraging Indian firms to make solar panels makes a lot more sense than 10 years ago. So you can see how far India is moving in the right direction. And you do worry less about regulatory risk in India, although if you believe time is money, you have to say the courts could move more quickly. But, you know, one of the other big important factors is the fact that the banks have cleaned up their balance sheets. And the banks can lend in a way they couldn't 5 or 6 years ago. So, you know, there are reasons, good reasons, to be optimistic about India from an economic and financial point of view.
Okay, I appreciate that, Henny. But a little bit more on the sort of areas where India should work harder to be more attractive to long-term investors from overseas. For example, like one of the stories that attracted much attention the earlier part of the year was this short seller attack on Gautam Adani's group. So it has to do with possibly lack of accounting, transparencies and so forth. Now, these are the kind of not just the physical infrastructure, but social infrastructure and the kind of system, including a financial and investment system that need to be further improved for stronger investor commitment. Don't you think? That's the area of concern.
So, the lack of transparency in the Adani group was widely known in India. And I happened to be in India when that report came out. And the first week in February, which was the week after that came out, BlackRock had a lot of our top people in India. And everyone was talking about the Adani group. To me, the Adani group, is symptomatic of one of the, I don't want to use the word interesting, but I will use that. So okay. Adani and all the most of the major entrepreneurs in India came from Gujarat originally. And Adani's relationship with the prime minister goes back many years. And an attack on Adani was seen to be an attack on the prime minister. And so there is an element of crony capitalism in India. At the same time, I have to tell you that Adani is not Enron. It's not, if you go to see his port in Gujarat, it's world class, it's awesome. And the crony, I should say, if you ask the Modi government, well, Henny Sender is suggesting an element of crony capitalism. I believe spokesman for Modi would say we need national champions. And if we made Adani into a national champion, it was good for India. The problem is that Adani became too powerful. And every tycoon in India felt he'll go after my business next. So it's not all that black and white, but the fact that the securities regulator doesn't show any sign of coming out with a kind of post-mortem is concerning. But, I do think that Adani represents an outlier, a huge outlier to be sure, but there are some amazing companies in India, and the public market valuations have been too high, if anything. So one wonders what inspired that report and which vested interests in India contributed to that report, because it was incredibly well researched. And the money behind it had to be considerable. So it points to the fact that, this most famous case of overvaluing and lack of transparency and lack of accounting, he did build some amazing infrastructure in India. And, if you're a distressed investor who understands India, it would have been a huge opportunity in a way.
Right. Okay. Thank you very much, Henny. I very much appreciated your balanced view of this, because quite frankly, most countries that have been successful in advancing their economies, including Korea, we have gone through the stage where we needed to improve our accounting standards and transparencies and so forth. In the phase of rapid industrialization. So I'm very much sympathetic with the situation. And also you made the point very clearly that Adani is not Enron. I think that says something very clearly about what was
the other point that I want to make is, you know, that technology has a complicated effect on India.
Right, true.
So there's a wonderful economist at Citibank in India, and he said to me, digital India happened too soon. And what he meant was he was referring to a lack of quality jobs for unskilled young workers. So you can work 20 hours a day for Ola, you know, the Uber equivalent in India. You can work for 20 hours a day for a food delivery company, but you have no social safety net. So the quality of jobs for young people is an issue. But on the other hand, so if you look at Mukesh Ambani, you know, who inherited an amazing petrochemical company from his father, but he has built a digital empire on Geo, and that is transformative. And I love to tell this one short story before I turn it back to you. So I was in the middle of India, in Madhya Pradesh, in the middle of nowhere. And I meet for an election, a local election, and I'm talking to this 15-year-old. Dr. Jun, he would break your heart. He had never talked to a native English speaker, and he was thrilled that I could understand every word he said. And it was on a weekday afternoon. And I said to him, why aren't you in school today? And he said, the teacher never shows up, but he can afford to go on Geo, on Mukesh Ambani's Geo, and study English, even though he's in a village in the middle of nowhere. So when he tells me he wants to be a doctor, I think he can realize his dream thanks to technology.
Yeah, I think it's, you know, there's no question that India has a huge human resources to be the main driver for its economy. Not just the digital technology side, but also, you know, during my days at the World Bank, I have met some brilliant colleagues from India. You know, they have this 1.4 billion people, even 1% or 0.1% of the people would be literally genius, I think, in their respective field. So I think it's a huge asset for the country. And I think it's, you know, we would welcome this alternative Asia is more credibly emerging, not just for its country, but for the world as a whole. Okay, let's move on. We have other interesting topics to discuss, but time is only, you know, it's left. Now, this tomorrow in Korea time, tomorrow 3 a.m., we expect to hear from Fed on its latest interest rate decision making. Market consensus is pretty much a baby step, 0.25%, 25 basis point increase. How do you assess the way Fed has been doing and is expected to do in fighting inflation and managing overall its monetary policy to guide the immediate and medium-term future of U.S. economy, and for that matter, the global economy course down the road?
You know, I think all of us have been surprised at how resilient the economy is and has held up in the face of this dramatic move from zero interest rates to over 5% since March of last year. You know, after delaying so long, you know, some people worry that they're fighting last year's wars. Some people worry that, you know, that monetary policy is not the most appropriate tool to deal with wage price inflation, that increasing immigration would be much better. You know, I worry that interest rates may move up beyond what the Fed calculates because our budget deficit is so big and the debt servicing is going to increase so dramatically. And I see a lot of countries that are losing their appetite for US debt. So I worry about accidents. I worry about the fact that there's so much that we don't see. And, you know, the lags can be greater than they have been in the past. You know, so all of us hold our breaths and listen to corporate earnings. And of course, we're in the middle of corporate earnings season now. Right. And the banks are very happy, right? But
except perhaps
more and more of what's going on is going on in the private markets, right? So private credit is a very interesting asset class, but there's more discretion and more of a lag. You know, when more and more companies are private and more of the lending is private. So because I'm a bearish person, you know, I do worry about accidents. And I must tell the audience that you, Dr. Tuna, are always reminding me to distinguish between short-term effects and long-term effects. You know, the US, to what extent do you think the apparently robust health of the US, you know, will be there in a year's time? Because most people say, if there will be a recession, we don't think it comes until next year.
You're asking me? Now, you are the person who give exceptional insight to our audience. But responding to your question, now you're talking about the recession, likelihood of recession is impact. If you
and the timing of any recession.
Well, this you know, was the first thing that I learned at the World Bank when I entered, that was some 30 years ago. Now, we were advised not to give two things together. One is what you are forecasting, the absolute number, and the timing of it. Don't share these two things at the same time, because you most likely and making mistake. So, I'm rather hesitant to say anything about whether or not recession, by if we define as a sort of a global growth of below 2%, sort of, whether we will have it or not, and second, when we'll have or not. I may talk about that separate too. But anyway, I think given the rapidity of rate hike, as you mentioned, I think it's U.S. economy, and for that matter, quite a few countries around the world have shown exceptional resilience. That's true. But even if you have in the boxing match, you have a jab, a few times, you don't feel it very much. But when it's accumulated, at certain point, the damage will be felt more seriously. So if the economist, the best word is if, the assumption. Talk about if Fed continues to raise its base rate. Now, Powell appeared to have mentioned that tomorrow's rate hike may not be the end of it. Although Bernanke has been saying something different, but if the contractionary monetary policy is continuing, then I think the weak spots in the economy will have a limit to withstand that pressure. For example, you did mention very briefly, but actually I was going to pursue this question. The most weak spot, weakest spot of all, as many feel, especially relating to a financial market, is a commercial real estate part. It's a very weak spot, and many countries start now feeling the pain of a huge drop in asset price, thanks to a very high rate, and also weak demand of those properties, and also work from home, increased work from home after the pandemic clearly had some impact on low occupancy rate and so forth. But I think this is the area. I'm just giving you an example. If that the continued high rate set by Fed, and for that matter around the world, now that will possibly ignite the fire in this segment. Then I think that will obviously aggravate, make bank balance sheet deteriorated, and it could have adverse ripple effect throughout the economy. That may be the potential trigger that we should be concerned about. I think this the second half and next year, as you said, may be important because quite a few office buildings, real estate properties, heavy investment of them were, those deals were made in 2018 or 19, something around that time. And usually we have a exit out of fund-related investment in real estate property, say 5 years. That's about next year is about the time that that has to be there should be a redemption pressure further. So that's the trigger. I wouldn't say that that will cause a recession in a big way by next year, because I can I should be careful about this because the Fed position may be become more accommodative to this potential downside risk the coming months and years. So just a partial answer to your question, not complete answer, is something along that line. So we should be very careful about further, once you have a certain amount of rain, now it's wet or becoming more vulnerable, an additional marginal increase becomes more powerful impact on flooding. I'd say sort of logic could be applied to this Fed monetary policy. So sooner or later, I hope to have more sort of stabilized, more neutral course, if not going down. But that's for the sake of global economic safety, if you like. I'm tempted to say that to you. This, Henny, you should talk more on that.
Well, we don't have much time, so I just will make a few quick points. One, we still have no idea what will happen at Jackson Hole, what the agenda will be at the end of August. And we're very curious about what will be on the Fed agenda. And, one of the things that I ask people about, and I have no one who can really answer, is, in the last few years, we've had a series of asset price bubbles in SPACs, in crypto, etc. Is what we're seeing in AI and the fact that the stock market strength is so narrow. Does that mean there's a bubble? I don't know. We should also remember that next year is an election year. And the Fed, like every other central bank, is under political pressure. And the last point I want to make about commercial real estate is a longer term report, because I thought, how can I think of long term, remembering Dr. Jun's remonstrations to me. And that is competitive advantage will be increasingly defined by climate. So Northern Canada is going to be much more attractive, I think, than Southern New Mexico, right? Because arid state, no water, global heat warming. So, if you're an insurance company, what are the projects that are going to become too costly for you to insure? Competitive advantage will more and more be climate resilience.
Okay, that's a great point. Actually, that is related to the personal last question that I was hoping to raise with you. That has to do with given the extraordinary weather conditions throughout the world, some heat wave and some heavy storms all over the now. Isn't this time to rededicate ourselves, to recommit ourselves to the value of so-called ESG management, and how you BlackRock sees that, and also the really last point has to do with the BlackRock's recent initiative pushing forward with Bitcoin ETF product. Now, in connection with this, is this in line with BlackRock's overall strategy to open for broader investment spectrum in the area of digital assets? These two would be the last question.
So the top of BlackRock is very focused on things like digital payments. And, you know, many firms charge so much money, you know, and how to introduce more efficiencies, you know, and, you know, I think that we always want to be leading edge in any new technology, but it's all part of ESG as well. You know, to frictionless payments, you know, it's the
social issues
who remittances, you know, that are paying a fortune to send money to their relatives. You know, these are historical concerns, you know, of BlackRock. And I would hope that countries have learned the lesson of the pandemic, which is borders won't protect you. They won't protect you against a pandemic, and they won't protect you when the sea rises. In one place, it will rise in other places too. This is no time for predatory protectionist policies. You know, food security, energy security. You know, we all share this planet, and we have to work together. And if the pandemic hasn't taught us that, then all that suffering really has been in vain.
Okay, great. It's right on time. Once again, Henny, it's a pleasure, as always, having you on our program, and also talking to you, even though it's a virtual meeting today. I was hoping to stop in New York this year, but that hasn't happened, but I hope to see you definitely before the end of the year. I'd like to see you in Seoul, most likely in November, early part of November. And of course, as usual, touch. I wish you all the best, and sorry for your late dinner because of this this conversation. On behalf of our audience members, I would like to thank you again for sharing with us your unparalleled insight on various issues we have. Thank you.
I learned so much from every trip to see you and every exchange, virtual or not. Thank you so much.
Okay, thank you. Bye now. Take care of yourself. Okay. Bye.
See you soon. Thank you.
Okay, bye.